My name is Catarina Caricati, and I'm an alumna at Columbia SIPA. Since our very first summit last year, a lot has changed in the world. Day after day, more ambitious plans from countries and companies are announcing decarbonization plans. We have new technologies becoming economically viable. We have regulators and consumers raising the bar to what is expected. There are, of course, pushbacks and backlashes. But the general trend is clear. Our world is going towards decarbonization. And this is what we are calling the global race to net zero. In parallel with the competition to be the first one to get there, more and more collaboration efforts are emerging. So, to get us up to speed with the global policy trends and all the technological updates that we had in this year, I invite you to the stage the speakers of our first panel of the day, the Global Race to Net Zero. Bruce Usher, professor of the Columbia Business School and Climate School and co-director of the Tamer Center for Social Enterprise. Shari Friedman, managing director of Climate and Sustainability at Eurasia Group. Fang, Managing Director, Global Head of Sustainable Finance at Bank of America, and Paula Caballero, Regional Managing Director for Latin America at the Nature Conservancy. And finally, the moderator of our panel is the journalist Michael Stott, Latin American editor for the Financial Times.
Good morning, and thank you for that introduction, and thank you, Luciana, for the very inspiring words that you gave us, how we can use these 2 days to replace the fear and worry with some faith and hope through collaboration and imagination. So Brazil Climate Summit's back, bigger and better even than last year, and we're going to open this panel by talking a little bit, giving you a bit of an overview about what's happening with the global race to net zero, setting the stage for you for the discussions to come. You'll remember 8 years ago, in 2015, the UN summit in New York, 193 countries got together, agreed some ambitious goals, end poverty, end hunger by 2030, clean energy, climate action. And one of the people who had the idea for that, the mother of those sustainable development goals, is here with us, Paula Caballero. We're going to hear from her in just a moment. Now, of course, we're halfway to that deadline from 2015, 2030. Only 12% of the 169 goals are likely to be met. And on 30%, progress has halted or gone backwards. And on climate change specifically, the latest UN report says we're way off track from the aim of limiting warming to 1.5 degrees. Temperatures are already 1.1 degrees higher. And on current plans, we're headed for 2.6 degrees of warming, according to that latest report. So there's a lot to do. Brazil has a crucial role to play. And there, of course, the news is much better, because those of you who remember last year's Brazil Climate Summit will remember that at the time Jair Bolsonaro was the president of Brazil, and he was in New York around the time of the Climate Summit and met his supporters for a rodizio beef lunch in Midtown. So how much has changed in a year? We now have a President Lula who is firmly committed to protecting the environment, ending deforestation by 2030, and we're delighted that we've got high-level Brazilian government participation in this summit. So, lots to be done. We've only got a brief time for this huge task of reviewing where we are in the global race to net zero, so our panelists are going to give us a few additional thoughts, and I'm going to start by asking Paula Caballero, here to my left, for her thoughts. She's now the Latin America Director for the Nature Conservancy, and as I mentioned earlier, helped create the concept of the UN Sustainable Development Goals a decade ago. So, Paula, given the latest slightly gloomy news on how we're doing, how do we get back on track with only 7 years to go?
Thank you. Thank you very much, and thank you very much for inviting me to this opening panel. I think when we talk about the SDGs, the most important thing to remember is that they were not inevitable. When Columbia first proposed this concept, we had no idea of the virulent opposition that we would face. And the reason for that is because it really was a paradigm shift. We were talking about going from a bifurcated world where only developing countries had a responsibility for implementation to a universal agenda. We were going from a minimalist social agenda focused on just end of the pipe, if you will, social deliverables, to an integrated framework that looked at development in all its complexity across all of the spectrums. And that was really something that was incredibly disruptive to business as usual. And the reason I mention that is because the point now isn't to just measure the targets and figure out, where we are until 2030. 2030 is now. The kind of solutions, the kind of investments and policies that have to be put in place are so complex that we have to do it now. So I've prescribed my team to talk about the word until, hasta. No, 2030 is now. I've made T-shirts that say this because we need to really change the transition, and we need to go from just looking at metrics that are simple and looking at the integration, because the other reason why the SDGs were revolutionary was because they called for an integrated agenda. And part of the reason for that was because there is this very false dichotomy of sort of environment or growth. And Luciana's introduction was very powerful because it points to the fact that, as I see it, as many of us see it, there is no such thing as environment. Let me give you just a concrete example. You will all remember the terrible drought, 2014-2015 in Sao Paulo. It's estimated to have cost about 1.5 billion reais. Well, it is also, studies have shown that if the watersheds around Sao Paulo had been managed in an integrated way, the economic cost would have been about 28% less. That's not an environmental outcome. That's a socio-economic environmental outcome. And that's how we have to look at the SDGs. Something that's very important about the SDGs is also that they were the result of collaboration. And I really want to acknowledge Ambassador André do Lago, who's sitting here with us, because it was Brazil that really helped to deliver the kind of very, very ambitious framework. There were very difficult political trade-offs at the last minute in Rio in '92, and Brazil went for the highest level of ambition. And so that's also what is needed. We talk about urgency, but we have to talk about disruption, and we have to talk about ambition. A second element that was really important in that collaboration was private sector. Private sector were our greatest allies from the very beginning because they were seeing a metric that made sense for them, that they could translate. And the question now for private sector is how to go beyond even ESG to look at to look at changing business models. Luciana was talking about new economic models, and that's what we need. And part of that has to be what we call nature-based solutions or natural climate solutions. I'll refer to them as NCS. 37% of the emissions reductions that we need to hit the Paris targets are land-based. And that is highly relevant for Brazil, for Latin America, and therefore for the world. And I hope in the successive conversations we're going to have to talk a little bit more about that. So the SDGs are about transformation and disruption, not just measuring discrete metrics. Thank you.
Thanks very much, Paula, for that. So very important there to note no contradiction between preserving the environment and development, which is something that's often raised. You mentioned the role of companies and the huge role they have to play in this green transition. I'm going to turn now to our second expert, to Shari Friedman. Shari's Managing Director for Climate and Sustainability at Eurasia. And in that role, she looks at how evolving environmental policies around the world affect companies. So Shari, tell us a bit about some of the global sustainability trends, how they're most affecting companies, and what companies should be doing about them.
Sure. So I want to first thank you so much for having me. This is a really great forum. I would just want to start by talking about where we are now, and there's been a lot of allusion on how we're set back from where we need to be. And the countries just completed a global stocktake under the United Nations Framework Convention on Climate Change. This is where all the countries got together to see where we need to be to retain global warming to 1.5 degrees versus where we are on track to be given all the policies and commitments that we've made. And what they found is, well, unsurprisingly, we're way behind. And more specifically, in order to get to limiting global warming to 1.5 degrees, by 2030, the world needs to be able to reduce an additional between 20 and 24 gigatons of CO2. That's over the next 6 years or so. Just to put that into context, in 2022, the whole world emitted about 37.5 gigatons of CO2. So if you kind of divide this up by year, in just a very rudimentary, easy thing, what it gets to is about a yearly emissions of about 10% of what we did in 2022. So to put that into context, when in 2020, when the pandemic hit and the whole world shut down, global emissions dipped about 6%. So you can see what an enormous task this is going to be. But I think it would be a mistake to say, well, nothing is happening. If you're a company, particularly, you have to track what's happening and the trends of acceleration of some of the policies. So I wanted, just to get to your point, go through a couple of trends that we're seeing that we see are particularly material. The first one is trade. And trade, climate and sustainability and social has always been in the conversations of trade. This is nothing new, but it's different now. It's there in a material, a financially material way. And I think that one of the ways that you kind of a case in point is the European CBAM, which is the Carbon Border Adjustment Mechanism, where if you are a country that is importing one of the covered sectors into Europe, you are going to need to pay at the border a price of your embedded carbon that is, if you're not from a country that has a commensurate climate policy. That's a material thing. That's something that actually is going to affect your bottom line. Another thing that I think we're tracking is access to capital, which I know Karen will talk a little bit more about. There's been, I know ESG right now is kind of a dirty word. Everybody is kind of backing away from it. And frankly, it's been a little muddled. People take a lot of different intentions and they put it under this one term. But it's not as though that access to capital is no longer going to be looking at climate or any of the other pieces that are actually fundamental, materially, financially fundamental to companies' profitability. Those will still be considered. And they're not, this gets, I think, to Paula's point about environment and environment and profitability coming together. And it's not as though it's out of the goodness of people's hearts, it's because there's a fundamental impact of climate policies on the bottom line. And so companies are going to continue to need to understand, to track, and to report how evolving climate policies, not just what's on the books today, but what you might anticipate is on the books tomorrow, and how climate impacts are going to affect your bottom line. How are they going to affect your business today and tomorrow? And finally, I want to talk about kind of this like environmental and social multitasking. We talk to a lot of companies and we talk to companies about climate, and then we've started to talk to companies about biodiversity and about water and about plastics and about social impacts. And a lot of reaction is like, oh my gosh, it's a lot. It's a lot to create the systems for all of these. But they cannot be done in a silo. We can't think about climate action in a silo without thinking about these other things. And again, it's not for the betterment of the planet from a company perspective. From a company perspective, it's because all of these different things, all of these different factors have impacts on companies' bottom line. So for example, on social, on human rights, if you are a company, if you're a solar PV company importing into the United States, you have to track your supply chain and understand if there are any human rights violations coming in from your supply chain, because if they are, your goods are going to be held at the border, and that is a material impact. So what I want to say is we do have this big gap, and whether we make that, whether we close that gap is really important. But for a company, whether or not we get there, the pathway and the acceleration toward that is creating policies that need to be tracked and that are going to affect companies' bottom line and get to what Paula was talking about with this intersection of profitability and environment.
Thank you. Thanks very much, Shari, for that. Corporate perspective. So now, of course, re-engineering the world for this clean, green future is incredibly expensive. Our next panelist is one of the experts on how we pay for this. So Karen Fang is Global Head of Sustainable Finance at Bank of America. Now, Karen, the good news, I think, according to a Bloomberg analysis, is that last year the world spent a little more on moving to clean energy, 1.1 trillion, than it spent on fossil fuel production for the very first time. But the bad news is that that's nowhere near enough, and investment needs to at least triple to give us a chance of reaching net zero. How are we going to mobilize the missing trillions to make this happen? What are your thoughts on that?
Thank you for having me, and it's an honor to be here with all of you. And Brazil does have a very important role to play. You are the sixth largest greenhouse gas emitter in the world, and you have so much in natural resources and biodiversity and renewable capacity, as Luciana talked about. So a lot to do in Brazil, a lot more to do in Brazil, and I love this competitive collaboration point, which I think obviously all the countries and all the public and private sector entities can come together. So my job is very easy at Bank of America. We have 215,000 people. We're one of the largest financial service providers in the world. We are #1 in ESG capital markets. That's actually one thing we're very proud of, because that is part of the answer to Michael's question, is how do we pay for this? So let me give you some optimistic trends in terms of where the money is coming from. Because according to the United Nations, in order for the 51 billion equivalent of CO2 emissions to come down to net zero by 2050 and come down by half in the next 7 years, and yes, we are behind as the world. I think there was a lot of shocks that kind of delayed us, and there's obviously a lot of inconsistent policies as well as lack of incentives to make this happen, but things are getting a little bit better. So if you look at the ESG capital markets that I started with, that market will go again to about $1 trillion of issuance. That's green bonds, that's social bonds, sustainability bonds. These are the SDG bonds, and Paula will be very proud of. These things are happening. They're issued by governments, agencies, companies, and people are using these proceeds for environmental transition, inclusive development. That is a great thing. $1 trillion a year, that is unheard of even 5 years ago. If you ask anybody where that market, which is a couple $100 billion, where it was going to go, no one anticipated this much momentum. That's #1. #2 is that number is getting better, according to the BNEF, which is for every dollar of fossil fuel investment today in 2023, $1.7 is going to clean energy and renewable energy. That is a good thing. Not enough, but let's start with some optimism. First half of this year, renewable energy, clean energy investment globally reached about $360 billion in 6 months. Again, that is 22% higher than the first half of last year. All of these are great trends. M&A, merger and acquisitions, because one of the things I think it's underlooked and we need to do more, and as a bank, we're doing a lot more of that, is brown buying green. It's the acquisition of clean energy and low carbon technology companies by the large incumbents in the energy space, in the power space, in the transportation space. They have the balance sheet. They have the capital. They're going to acquire these technology companies that used to take 7 to 10 years to mature and perhaps reach public markets. But now we're seeing this acquisition happening at much, much earlier stage. You're seeing ExxonMobil, you're seeing Chevron, you're seeing Occidental, you're seeing BP. These are large incumbents in the oil and gas space, buying renewable natural gas companies, buying renewable diesel companies, buying carbon capture companies. That is a terrific trend. Because as we measure, as Paula talked about, we measure linearly, single-dimensionally. We're not measuring all the incumbents in their CapEx, in their OpEx, what they're spending. So I'm not trying to paint an overly optimistic picture, because clearly we're not delivering the $3 to $5 trillion a year that the United Nations says we need, or the $9 trillion we need, according to McKinsey. We're definitely not there. But we're doing a couple $1 trillion based on our estimate, whether it's the number that we're now tracking from existing companies in high-emitting sectors, as well as just the amount of clean and pure capital that's going to clean energy. So that's the good part. And why is that happening? And I like this expression that Shari talked about. It's not out of the kindness of heart, where all people will live as one. But it is not because morally, culturally, environmentally, and science-wise, this is the right thing to do, because we used to debate that. I've been on Wall Street for 25 years. I remember I got this job from our CEO and our board and our management team 3.5 years ago. Even 3.5 years ago, when I go into a boardroom at a client at a company, half the debate is still around, why do I want to do this? 3.5 years later, we have a $1.5 trillion 10-year goal. We're almost a third done. Because the companies, the clients are asking us to help, to bring them the capital that they can have the green transition and have the social inclusion. We're being asked to deliver capital. That's what a bank's supposed to do. We're not supposed to be professors and teaching about why environmental science is important, or engineers and telling them which technology to bet on. Our job is to deliver the capital, is to connect the supply and demand of capital. So that is a great thing. That gives me tremendous hope as a banker. Now we can do our job, is to deliver that capital, whether it's through public capital markets, private capital markets, M&A. We have to think about creatively to deliver. And blended finance is such an overused word. Public, private, philanthropies. But we're seeing that happening in technologies that we could even dream of 5 years ago. In renewable fuels, in sustainable aviation fuels, in carbon capture, sequestration, green hydrogen. And Brazil, I hope Brazil is going to be one of the largest green hydrogen economies in the world, because you already have 90% renewable energy. People build renewable energy before they build a green hydrogen economy. You are halfway there. So kudos to you, and tremendous hope that you could deliver that, because all of those technologies that we can bring capital to will be part of the answer. And the other part of the answer, obviously, nature-based solutions. That's a much more complicated topic. The carbon credit market will deliver a lot of capital for that too. And Brazil is heading into a cap and trade market, and that is roughly about 30% of the global carbon markets right now. That's actually a very, very fast fix, because if you have a carbon tax, you'll have a lot of money to pay for all of this. And obviously, that's not going to happen in every parts of the world, but Brazil hopefully will have a robust, compliance carbon market as well that'll help pay for the bill.
Thank you, Karen. Thanks very much. Amazing to hear how quickly things are changing in the world of finance. Finally, of course, we won't get to net zero without educating the world's business leaders to prepare for it, and that process is underway right here at Columbia. And our fourth panelist, Bruce Usher, is co-director of the Tamer Center for Social Enterprise and a professor at Columbia Business School. So, Bruce, could you give us your thoughts on the business opportunities and challenges from decarbonization, and tell us a bit about the importance of education in the race to net zero?
Thank you, Michael. So let me begin by saying I believe there's a fundamental misunderstanding about the current situation with respect to climate change and our ability to address it, by which I mean to avoid a catastrophic outcome. And the misunderstanding is the status of climate solutions or decarbonization opportunities, which are primarily driven by business. Let me explain what I mean. I've been working this for more than 20 years now, right, Michael? And 20 years ago, the science of climate change was already very clear. We understood what the problem was. We understood where we were headed. And investors started to get interested, and business leaders started to get interested, and already we had these conversations around the topic. And not much happened. And the reason for that is very simple. There really was no way to decarbonize a global economy 20 years ago without essentially destroying it. If you think about renewable energy, which I'll get to in just a minute, it was incredibly expensive and had no scale. If you added up all the solar power, all the panels installed in the world, when I got into this around 2000, the energy produced was 1 coal panel. That was it. Okay. Electric vehicles didn't exist, green hydrogen, no one could consider. None of the technologies we have today, they did not exist, or they existed, but they were too costly and they weren't at scale. So you could have this, you understood the science problem 20 years ago. There was actually very little for business to do about it. There was nowhere to invest. I was trying to invest. There was very few opportunities to do that. Now fast forward to today. Where are we today? According to the leading consultants, analysts, bankers in the world today, if we look at the carbon solutions that are out there, 3 of them, renewable energy, primarily solar and wind, electric vehicles, and energy storage, are at scale. Shari mentioned already over $1 trillion a year going into these sectors, growing at an incredible pace. And if we continue on this pace and implement them globally, this will reduce global greenhouse gas emissions by 50%. This takes us halfway to net zero. Now that's not good enough. The scientists tell us we need to get all the way to net zero in the next 30 or 40 years. The other 50% of the technologies we need are not yet at scale, and they're not yet available commercially. They're not yet commercially competitive with polluting technologies, but they exist. These are technologies like green hydrogen, which is relevant to Brazil, technologies like direct air capture, technologies like sustainable aviation fuels, and so on. Those technologies exist. An awful lot of capital is going into driving down the cost and improving the scale of them. So what do we need on the education front? Because that was really your question. I think 2 things. One is, for those who are entering the labor force today, understanding that the world today is one of 3 decades of coming decarbonization. The global economy that we've built is going to decarbonize over the next 3 decades, and that will create enormous opportunities and challenges for anyone in business, and pretty much any business in the world. And when you think about those challenges and opportunities, there's those 2 buckets. What's already commercial at scale, and really the challenge and opportunity there is just to do more of it. And what's not yet competitive, and the challenge there is innovation and getting it out into the market. So the role of education is to make sure that young graduates today understand that opportunity, understand the challenges that come with it, and then graduate and go on and execute on it. Because at the end of the day, we understand the science today. The policy is always challenging, but in many cases, the policy is advanced in many countries of the world today, especially here in the US, the Inflation Reduction Act. Today, it's really a question of executing, and that is where the education comes into it.
Thank you. Thanks very much, Bruce. I think there's a theme there from all the speakers, which is about how things that seemed almost impossibly ambitious a decade ago, or 2 decades ago, are actually now well underway and are starting to reach scale and gathering speed astonishingly, which is a good sort of antidote to the climate gloom that we sometimes hear too much of. Paula, I'm going to come back to you on the nature-based solutions, because I know that's one of your specialities, and they're particularly important in relation to Brazil. I think you mentioned that they could meet 37% of the emissions reductions required. What tools or incentives do you think are needed to increase investments and uptake of nature-based solutions?
Thank you, and it's great to follow on this very invigorating conversation. As I mentioned, and as you've echoed, a lot of the potential that is in nature can really help us, together with the energy transition, to avoid the worst impacts of climate change. And I take what Bruce was talking about, existing technologies and emerging technologies. But the most time-tested, scalable, cost-effective technology already exists, and it's in nature-based solutions. It's really simple things like conservation, restoration, and very critically, better managing lands. And these aren't protected areas. I'm talking about agriculture and ranching, which are absolutely central to the Brazilian and to Latin America and to global economies. There are ways to transition entire sectors so that they become and contribute to net zero in a way, as you said, that delivers profitability. This is not for the good of the planet. This is really good for the bottom line. And the good thing about nature-based solutions or natural capital solutions is that they deliver a whole host of co-benefits. The Sao Paulo example I used, it's not just about dealing with drought. It's about water security. It's about food security. It's about economic resilience. And what is really, really critical is that that transition can be augmented if we understand that it is not about net zero, that it is not about a zero-sum solution, but that these are solutions that deliver equally on the economics, the social, and the environment. We're not really in a good place. We lost in 2022, last year, an area that was equivalent the size of Switzerland to deforestation. But the good news, for example, in Latin America, is that over half of the continent of our region is still covered in forests. We have 57% of the world's primary forests. The solution to climate has to be, including Latin America, and has to be with nature-based solutions.
Just a quick follow-up there, Paula. Quick follow-up, sorry. Where do we look for best practice? Where are some of the examples of best practice in nature-based solutions globally at the moment?
Well, some of the examples are actually in some of the work that we're doing to transform the entire beef sector, for example, helping transition the agriculture and the ranching sector to more sustainable practices. The issue right now is that economic incentives are too few to change the value of the standing forest versus deforestation. And we need to, as you're saying, scale up very rapidly nature-based solutions. And for that, carbon markets can play an absolutely decisive role to really help provide the kind of financial support to get broad-scale, wide adoption of nature-based solutions.
Absolutely, thanks. Well, that's a perfect entree for Shari, because you mentioned earlier the EU's carbon border adjustment mechanism, which is going to come into force on October the 1st in a sort of transitional phase. But this is going to have a global impact, isn't it? It's going to affect other countries too. Tell us a little bit about the global impact of this.
Sure, and if I could just take a total diversion, something that you said made me, Bruce, think about this funny story about the reduction of price in technologies. Many, many years ago, when like 20-ish years ago, I did solar installations. I used to be up on roofs installing solar panels, right? This is just a side thing I did. And the company that I worked for, after we would install, he'd give the people this box of fluorescent lightings, like LEDs weren't even out yet, so it was like fluorescent lights. And the reason he did that was because the panels were so inefficient that nobody would even notice the difference on their bill unless he was trying to get people to actually see a difference and then tell their neighbors, hey, this is great, you should put these panels up. But it is quite a difference from where we are now on solar panels. Sorry, there's just a little bracket.
Really interesting.
So anyway, so one of the things that I think is really important to track, and I alluded to this, is not just the policies that are on the books today, because anybody can tell you that, and lawyers are very good at being able to explain the details, but it's what happens after that. And I think a really good explanation is what's happening on this carbon border adjustment mechanism. So the EU puts forth this carbon border adjustment mechanism, right? So that anybody pulling in on these covered sectors, which is a lot of the energy-intensive, trade-exposed industries, iron and steel, cement, aluminum, et cetera, chemical fertilizers, if you're coming in. So now what happened then is, of course, all the countries are like, this is crazy. You know, there's a lot of protests. But ultimately, what's really happening now is, despite all of the protests, other countries are starting to put on their own similar carbon pricing policies that are covering, interestingly, similar sectors. Brazil has one in the Senate right now, has a bill in the Senate right now. China has moved from having their whole their carbon trading going just from electricity into covering the covered sectors as well. You're seeing this across the board. Then you're also seeing countries now putting on carbon border adjustment mechanisms. And they're not doing it yet, but you're starting to hear. Right after as the Europeans were passing this rule, you started hearing the Canadians come out and say, well, we'll think about it, the Japanese, the Koreans, the UK. So then you're going to start to have other countries putting on the carbon border adjustment mechanisms. And then you're going to start to see a whole other pattern. Then you're going to start to see the EU moving out on what they're doing. So it's not just going to be those sectors, they're going to start putting new sectors in. So maybe pulp and paper and maybe glass. So you're going to start to see this proliferating. I use this as an example because it's not just that one. I think you have to look at the trends that are moving and how one policy is affecting another policy, and where we're starting to see the uptake on policies that don't just affect the borders that they're in, but affect borders outside of where they are. And that's what we're seeing on that. We've set up a very globalized system. So one country's policy is affecting a lot of other countries because we have imports and exports. I think that we're going to start to see this in air travel, and we're also going to start to see this in maritime, is one of the things that we're tracking a lot. But the global movement toward policies that affect other countries and companies in a very material way is something that we'll see evolving really clearly.
Thank you. And it's good to hear that there's a little bit of countries now starting to move in sync on this. Karen, you gave us some encouraging sort of numbers about how climate finance is starting to take off in a way that didn't seem manageable even a few years ago. But there's obviously still a gap. There's still quite a way to go to get to the sort of sums, the scale of investment we need. And the private sector has got to supply a lot of that, but there's a role too for development banks, public sector. How are we going to get the public sector and private sector working together more effectively to mobilize that money? And where in the world do you see examples of best practice that we could learn from in mobilizing finance for climate?
Yeah, so you're absolutely right. And I think Bruce's math is spot on, and that's kind of what we actually focus on in our sustainable finance strategy. more than, I think, 75% of the investments, right? So it's obviously happening at a much faster pace than before, is going to renewable energy and proven technologies like EV, energy efficiency. EV charging isn't even fully prolific yet. So, but, you can loop that in that category. That's where it's attracting the most amount of dollars because it's investable. The emerging technologies and the nature-based solutions that will take us all the way there for the other half of the decarbonization is attracting much less dollars. But obviously the EU, whether it's the sustainable finance taxonomy, whether it's the border adjustment on carbon tax, all the carbon compliance, carbon trading regimes is delivering some progress. But I think for emerging technologies, I think the most crucial ones, again, are renewable fuels, right? And that's including SAF, sustainable aviation fuel, green hydrogen, carbon capture and sequestration. And again, that includes DAC, direct air capture that Bruce talked about. And really just long duration energy storage to stabilize the grid. You can have a lot of renewables in your grid if you don't stabilize, it's not really, it's too intermittent. So when you think about these technologies, I say these four are the most important, and they're attracting a much less pool of capital, and that's where blended finance matters. And that's a huge focal point because we need that to get to net zero. Emerging markets is a much more dire, in terms of capital flow, it's a much more dire story as well. And then again, I can be the optimist here and pointing out to transactions that we're doing in small island developing states, that we're putting solar and storage on islands that never had electricity before. We did a transaction with InterEnergy in Dominican Republic. I can point to the great example. These are just examples from this year. So we're really been working hard at this. We're providing affordable housing in West Africa. We're working with the United States government and local lending institutions on mortgage providing. So these are good examples. We did Blue Bond with Nature Conservancy in certain countries, Debt for Nature swap. These are things that we're all doing, but do they add up to the trillions that we need for emerging markets? We don't have that. So emerging technologies and emerging markets, emerging countries, these are two gap areas that blended finance, right, in terms of first loss, whether it's philanthropies, whether it's foundations, whether it's just grants from governments. The Department of Energy in the United States is doing a great job on incubating these technologies. That money just has to be willing to essentially lose it all, right? That's the first loss that we call first loss. And in finance jargon, the mezzanine will come from private infrastructure funds, private equity funds, and private debt funds. And then you have senior capital, right? And the banks obviously are heavily regulated, and I think we're heading to an even more heavily regulated state. So I think we do need all the investors, insurance companies, pension funds, asset owners to come in, and which is why in Glasgow, in COP26, it was actually a very good moment when the private sector arrived and private sector pooled together all of these assets under management. Don't want to over-exaggerate it, but there was over $300 trillion represented, at least had the ambition to help, right? So when you think about that, I think our collective focus is with the government. I mean, Inflation Reduction Act, I can literally spend an hour on that, on how much it's helped in the US to go from a climate finance laggard to potentially a climate finance leader. Just since the passing a year ago, it's over $110 billion in clean energy investments. And we just did the first transferability transaction, which will open the door to more investors and taxable corporations in the U.S. to participate in climate finance. That wasn't really possible before. So when you think about this, I think if collectively we can use pooled capital structures, blended finance is the one word for it, to actually address the critical need to get more capital into startups for these green technologies to reduce the green premium, so it becomes obvious that everybody wants to use it. If it's cleaner, cheaper, and affordable, why not? Right? And then emerging markets, I think that would be a very good thing. That's our focus.
Thank you. And Bruce, I was really struck when you were talking about how the science was clear 20 years ago. There wasn't that much we could do at that point because the technologies weren't there. And then you said now we've got sort of half of them that are scaling and that are working, and there's another half that are not there yet. If we turn to that half that are not there yet, which are always the more interesting ones, what do you think are perhaps the most underestimated technologies that we should be investing in? And in that respect too, how big is green hydrogen going to be? Because going around Latin America, I hear lots of countries talking excitedly about how they're going to be exporters of green hydrogen. Is there really going to be a global market in exported green hydrogen, or is it going to end up being made close to where it's used, like in the US or Europe?
That's a really hard question to answer, Michael.
Sorry.
I'll explain why. I mean, green hydrogen is an extraordinarily interesting opportunity because green hydrogen has potential to fill in the sort of missing pieces in decarbonization. Industries like steel can use green hydrogen, air travel, long flight travel, heat, and industrial heat, and so on. The opportunity for green hydrogen is connected to the rapidly declining cost of renewable energy. So it's intuitively really exciting. The problem with green hydrogen, unlike, say, renewables, is in order for us to use it at scale, you can't just sort of plug it in to the system. You can plug in solar onto the grid. You can plug in electric vehicles into the electric grid and go from there too. Green hydrogen requires not just the production of hydrogen, it requires the transportation of hydrogen, which is extremely difficult to use, to move. It requires industrial processes to completely change to use hydrogen. It requires global markets and systems that literally don't exist. And we're completely rebuilding an enormous amount of energy infrastructure. So will green hydrogen become this enormous business in the future? I really don't know. And what I tell my students is if you want to get into the most exciting, most challenging, and most risky segment, I think it's green hydrogen today. Can I make one additional comment, though, Michael? I've got the mic for one second. I want to come back to Paul's comment about nature-based solutions. Now, the opposite of green hydrogen, the simplest solutions, the proven solutions, the ones that we know that work. And I completely agree. But I do want to bring up a real challenge to protecting nature and expanding nature as a climate solution. That challenge today is the carbon markets, or lack thereof. The carbon markets that currently exist are not fit for purpose to allow us to really accelerate nature-based solutions. And it's this a long, complex discussion, but essentially the carbon markets today, outside of, say, the EU market, are a patchwork of voluntary markets. They're not well regulated. There isn't compliance behind them. There isn't government rule of law behind them. And as a result, recent studies have shown, including one that was done by TNC a few years ago, that the vast majority of nature-based projects to date have not had environmental integrity, have not really reduced emissions. That's not to say going forward, that's not an opportunity. Again, I think it's tremendously important that we find a solution that works with nature-based. And it has to be a carbon market solution. There really is no other way to do this at scale. But I just want to caution that the markets as they exist today, I think, are truly not up to the task and not a great place to be investing time or money at the moment until we change the rules.
That's a really important point. Thanks. Let's hope that Brazil gets the design of its carbon market right as the bill moves through Congress. Paula, I just want to come back to you a second. I mean, when you came up 10 years ago with the idea of the Sustainable Development Goals, did you imagine we'd be where we are now in 2023? What did 2023 look like to you 10 years ago? Are you surprised? Are you disappointed? Is it what you expected? Just give us a quick sense of how it's worked out from your big idea 10 years ago.
I think we're moving in the right direction, and the fact that we're having these conversations really attests to that. But I think we're still trying to tweak business as usual, and we're not looking at systemic changes. And when you look at the kind of transformations that we need, it's the difference between saying we're going to end hunger to saying we're going to shift entire food systems. And that's a very different mindset and a very different approach and a very different role for private sector. I agree completely with what Bruce is saying about the carbon markets. That's about the generation of the carbon credits. We need more equity, integrity, and transparency, but it's also about the use of the carbon credits, and the private sector really commits to making sure that offsets are really last mile or the last bit that can be done. Another really important area that's opening up that I have to mention, because it's Brazil and we are talking about net zero, are indigenous and local communities. In Latin America, they hold 30% of the carbon. Globally, communities manage and sit on about 300 billion metric tons of carbon. So the race to net zero, nature-based solutions, is also about that equity piece of the carbon markets. It's about benefit sharing, and it's about making sure that there's a fair price that compensates people and nature. So the trends are right, and I like very much what this panel has been heightening, but I do think that there's a call for urgency. 2030 or 2050 is now, and that there is a need for more disruption, more ambition, and a lot more risk. Yes, we have to buy down the risk of moving more capital into nature-based solutions, but we also need to have a commitment from finance sectors, from key players, to be able to get that kind of upfront patient capital that you need to finance these systemic transitions. And that is what we need to measure for the SDGs, not just the simple metrics of whether we're hitting a given target or not.
And so we want more ambition, more disruption, more risk-taking. That great acronym ESG, it's become now a little bit of a political battleground in the US, particularly as the election gets underway. I'm interested, Shari, in how you see this ESG fight working out, the sort of pro and anti-ESG fight, which is particularly strong in the US, but is also a global phenomenon. I mean, is ESG over already?
I think the term, and I'm also would be interested to hear what Karen has to say about this, I think the term is definitely going to go through some revisions. But I think the fundamental bottom line, and this is something I think, Karen and I were both batting back and forth here about that, markets are going to move not on the goodness of their own heart, but they're going to move where the money goes. So there's kind of two different pieces of ESG, right? There's the ESG that is value-based. That is like, this is something that I want to put my money into because I believe this is where things should go. That is a very limited pool of capital. It is a pool of capital, but it's limited. And that will continue to go as long as there is a demand for it, and there is still a demand for that. There's the other side of ESG, which is risk-based. It's saying, look, we are going to look at and make sure that we are evaluating and disclosing and understanding all of the risks around ESG. And this got started with Mark Carney when he started to get this concept of climate-related financial risk. He started to say people are not looking at this risk. And he wasn't thinking that we need to move the world in this direction. He was the chair of the Financial Stability Board. He was saying, I see this as a risk to the whole stability of our financial system. And if we don't start looking, if companies are not starting to look at the risk and investors are not starting to consider the climate risk of a piece of carbon-intensive capital being placed here, what happens with the policies shift? And all of a sudden, that's less profitable or no longer profitable. What happens if it shifts in another country to which you're trading, which we were just talking about? So those types of things, it's not that what's on the books, it's what's about to be on the books, and are you thinking and looking around the corner, and are you putting the investment capital at risk? Those will retain. Both of those will retain. They'll retain separately, but I think that we're going to keep seeing it. I think we're just going to see different terms because everybody's backing out. But even in the states, I will say, even in the United States, the states that are pushing back, where you have the governors pushing back against ESG, the companies are still doing climate risk assessment. Nobody is stopping that.
Okay, thanks. And let's bring Karen in, because I know you'll have thoughts on this. I mean, how helpful is the ESG term in finance? And of course, we hear constantly about the risks of greenwashing, the problems about lack of common standards. I mean, what's your view on the debate?
You will see that I don't have ESG investing in my title. So 3.5 years ago, when I've been with BofA for a long time, 13 years, and I was always running structured finance, and people say, okay, please start this for the whole company, from consumer all the way to banking. What do you want to call your team? And it was definitely been suggested for me, ESG finance, ESG investments. I said, no, not because I forecasted the political debate in the US 3.5 years later. It was simply because I fundamentally believed ESG was a set of principles. How we should think about the interconnectivity between environmental, social, and governance issues. It's how we should think about how we manage a company, how we manage a business, how we make profits, and also satisfy our stakeholders. But it's not really something I know how to do, right? I'm a banker. My job is to providing investments and capital and money in broader sense to the supply and demand, of capital groups and people that want the capital and people who can supply the capital. My job is to connect the two, including the capital from our own balance sheet. So my job is to provide that in a sustainable way for sustainable environmental transition, but also for inclusive development, because without that, it's not stable, it's not sustainable. So That's probably you're just talking to someone. And then I think now on Wall Street, everybody is having a sustainable finance group, and ESG is being sort of like tucked away as a sort of, again, social policy, risk policy, environmental risk considerations. And I think that's probably the right way to think about it. So I think the most important thing for us is be pragmatic. Right? If we waste all the time, think about this. In the boardroom, I'm having conversations on what's the cheapest capital you can raise for whatever that you want to raise for. That is what I'm supposed to be doing. That is what my colleagues and I are supposed to be doing. If we can stay away from the political debate, because I think the science is pretty clear. There's no excuse to use more wind and solar and EV and energy efficiency. That's just makes economic sense. In 90% of the world now, to build a wind and solar new build facility is cheaper than building a fossil fuel facility. Why not? Right? If we can do the same thing for these emerging technologies, make them more affordable, and my sincere hope is the United States, we can have our responsibility to drive down the green premium using Inflation Reduction Act. The $369 billion of tax incentives is actually supposed to spur trillions of dollars of economic activity. And if we can bring the green premium down, we'd have done something really good for the rest of the world. So be pragmatic and focus on the bottom line. And the last thing I would say is 8,500 large companies in the world, according to the UN, have declared net zero. 90% of the governments have net zero targets. A third of the market cap have net zero. You know why that really, really is important and why that's making my job easier? Because the entire supply chain is shifting. And you go to a CFO and CEO of a company and say, you can no longer sell to Amazon or Apple or United States federal government because your products are not lower carbon. That's a bottom line issue. It's a business proposition. The more we make this a business proposition and a risk management issue, the easier it is for the money to flow.
Great, thank you. So we've moved well beyond the acronym. We're out of time now, we're gonna have to wrap up, but I just wanted to give Bruce a very quick final opportunity for his thoughts on that.
I'll be very brief, Michael. Let me just wrap up by saying we can avoid catastrophic climate change. We have the capital, we have the technology, we have the ability to do so. That does not mean we will. At the moment, we are not on the path to avoiding it. The difference between we can avoid it and we will avoid it is you. It's just getting out there and getting the job done. We know what we need to do at this point. We have the pathways to do so. It's really a question of execution, and it's a question of people like yourself who are interested in this topic and millions of others just getting out there and getting the job done. Thank you.
Perfect concluding words. Thank you so much, Bruce, and thank you to all of the panelists for a great discussion. Much appreciated. So we're now going to make way for the next panel, which is going into more the role that Brazil has to play. Thank you very much.